So I came across this video in my feed by Michael Bordenaro talking about how real estate experts are lying to cover up what's really going on in the housing market. Let's dive in.
Today I read something, thanks to one of my viewers, Pete, that proves that they are lying. And who is they, Michael? Well, they are mainly people related to the real estate industry, meaning real estate agents and brokers, mortgage brokers and lenders. The real estate industry is basically begging the Fed at this point to stop with the interest rate hikes and hold off on unwinding their balance sheet because they're afraid that the housing market is going to take too much of a hit. This is what I mean about this is how we know they're lying. You have a lot of people that are telling you, oh, it's still a great time to buy a house. Get in today and refinance later. They won't tell you the industry is reeling right now.
So the Mortgage Bankers Association, as well as the National Association of Home Builders, sent an open letter to the Federal Reserve. Let's take a look at some of the key points in that now. Mortgage rates have now reached a 23-year high, dragging application activity down to a low last seen in 1996. The letter then goes on to say, further rate increases and a persistently wide spread pose broader risks to economic growth, heightening the likelihood and magnitude of a recession. And in a nutshell, they're looking for the Federal Reserve to stop increasing rates and then hold off on selling their mortgage-backed securities in their portfolio. So just keep in mind as we continue here that this letter from the Mortgage Bankers Association and the National Home Builders Association in plain text is outlining that there is an increasing likelihood of a recession. But don't forget,
there's not any problems. There's no issues. It's a great time to buy a home.
According to Fortune, the Federal Reserve is likely to keep rates where they are going into next month's meeting, but thereafter, all gloves are off, and it's likely that there are going to be further rate hikes. In fact, here's what the Minneapolis Fed president said just a few days ago on the matter.
Saying that we seem to be on track for a soft landing, but of course he says it's too soon to declare victory. And just when you thought that there might be a bit of victory, he warns that if inflation remains high and the economy too resilient, the Fed may have to step on the brakes.
Based on that, further rate hikes cannot be ruled out. In fact, many would say that they are likely to happen in the future as we continue to stamp out inflation. And these rate hikes will further put pressure on the severity and likelihood of a potential housing market recession based on the very letter that we just looked at. But once again, keep in mind,
it's a great time to buy a home and there's
no problems here.
They are reeling in the background and trying to make it so that people don't stop buying homes, guys. They are trying to lobby the Fed to stop with the interest rate hikes because it's just going to cause too much damage to the market. Now, one thing that they're blaming this on is they're saying, you guys have to stop with this because of the shortage of inventory. We're seeing inventory creep up, guys, and the reason for that is because the inventory that is coming online is not selling because nobody can afford to buy at these rates combined with these prices. People are just going to continue to stop buying, guys.
Now, this theory, we'll call it, states that we are short millions of homes in this country based on over a decade of under-building homes that followed the great housing market recession of 2008. But if that theory held water, we would still be seeing record low inventory levels because there's just not enough homes, right? Based on this, at the start of the pandemic, there were just under 1 million listings. Then inventory dropped to the mid 400,000s shortly thereafter by the spring of 2021. However, that spring of 2021 is also when prices started skyrocketing, especially in specific markets, which led to a whole new wave of people listing their homes and cashing out on the seller's market. But after that, we had our new low in inventory shortly thereafter in February of 2022 at around 350,000 listings. And ever since February of 2022, the inventory has been growing fast, pretty much blowing that theory out of the water. And at this point in time, we're back to about 700,000 listings, which is literally double the low end of 2022. The inventory of homes in the United States doubled in about 18 months.
If more pain comes in the economy and people need to sell their home for whatever reason, then that brings more inventory online. It's just unfortunate that it comes from a distressed source.
I'd venture to say that there's very little distressed inventory on the housing market, at least right now. But what's going to happen when something inevitably happens, whether it's global conflict or the next pandemic or who knows what, and then all of a sudden we have tons of these distressed listings hitting the market where people need to literally sell that thing in the next few months, otherwise it's going to be foreclosed on them.
First-time home buyers are going to be the ones to take the brunt of this. After a new report from Zillow just came out, half of the people who have been buying homes in the first half of 2023 are first-time home buyers. It all comes down to one thing, guys. The bank of mom and dad is helping people get into homes right now. They will care if they go to sell it for some reason and they're not able to without coming to the closing table with a check, unless the bank of mom and dad's going to step in and help with that too. Okay, just a year ago, it was 45%, and the year before that, it was only 37%.
So what this tells me here is that it's the inexperienced first-time home buyers who are buying houses right now, and those who have already bought houses and have had experience in real estate, by and large, are just staying out of the market. You see, in 2021, it was a lot of second and third homes being purchased by affluent buyers. You still have these buyers in the market, and they're showing up with piles of cash if there's a good deal to be had. But if not, these people are simply not buying right now. This is literally a game of hot potato, and at the very end of the chain is the first-time home buyer.
It's basically putting all these first-time home buyers in a home at an all-time high price at decades-high interest rates and saying, here you go. Well, hopefully it all works out.
Now here we have a house for rent, 4-bed, 2.5 bath for $1,850 per month, and they bought this house back in 2018 for $188,000. Not so bad. However, this house has been sitting on the market for 2 months now, which is quite a long time for a rental, and they've only cut the price by about $100, which suggests that the house is actually too expensive, because when you look at what the average rent price is for a house here in Little Rock, it's only about $1,500 a month. This is still well above what you could probably get somewhere else in Little Rock, which is why it's probably still sitting here vacant.
Now, if you're someone who's looking to rent a piece of real estate, especially a single-family house, you're probably starting to see some significant deals popping up in your market. A lot of people are staying right out of this market and not selling, or they have something on the market that isn't selling right now, meaning that they're looking to rent their real estate to get cash flow from it to cover their carrying costs.
There's literally like 125,000 foreclosure filings being processed at this very moment, and that's just the beginning. We haven't even seen a hard landing from this recession yet, or things get really bad where the unemployment rate really ticks up. That's happening right now just because of all the stimulus programs being over with. Never mind the fact that we haven't actually felt any real pain from this recession yet.
Now, this article here about foreclosures just came out a few days ago. Foreclosure filings jumped 34% over the past year to the highest level since the start of the pandemic. In addition, in September alone, there was an 11% jump in foreclosure filings to 37,679. Guys, that's an 11% jump in a month. That's not a year-over-year figure. The year-over-year was an 18% increase.
It shows three different things. It shows the number of transactions, the sales volume in dollars, and the percent of unit sales. And you can see they all track hand in hand, and they're all going down.
So in 2017, there was about 275,000 U.S. real estate transactions for foreign buyers. Now, most of these foreign buyers are going to be experienced real estate investors who have owned real estate before, and a lot of these are second or third home purchases or potentially just investment properties that are left empty. Well, that has since dropped to about 80,000 to 100,000 transactions among these foreign buyers in the U.S. in the last few years, and that's a huge decrease. Once again, we're getting further evidence here that the experienced real estate investors are not buying in this market. I'd like to leave off here with this. Wise men say, only fools rush in. Unless you have to buy a home right now for something like a job relocation, or you're sitting on a massive pile of cash where you can just buy something outright and you're getting the deal of a lifetime, in my opinion, it just does not make any sense to buy a house or really any real estate in general right now. There's a ton more downside to this housing market than there is upside. In fact, I don't think there's any real upside to the housing market right now. That's why I personally sold my house in Miami Beach, for example, earlier this year, as I wanted to cash out on the market, lock in my profits, and wait for the big drop to happen, having my cash at the ready. You can watch Michael Bordonaro's full video linked up down in the description below, and I would highly recommend subscribing to his channel as he drops tons of helpful real estate insights. Lastly, you can grab a copy of my book, which is all about launching a side hustle and creating a secondary income stream in person at Barnes & Noble. You can also find copies at libraries across the United States. You can find it on Amazon, as well as an author-narrated version over on Audible. This is a really important time to secure an additional income stream with all of this uncertainty going on in today's world. Don't forget to subscribe and hit the bell if you enjoyed this video. Thanks so much for tuning in. Click below to watch the next video, and I'll see you there.